Picture this, you're staring at your trading view screen after New York Open. ES is grinding near yesterday's high. NQ is whipping around. EURUSD just swept the London low and snapped back. Levels marked, stop loss planned, position size calculated. You even have a sticky note on the monitor with a Mark Douglas quote. You don't need to know what's going to happen next to make money. You nod, then immediately try to guess what will happen next. Price taps your zone. Your plan says, enter 1R risk, stop loss below the wick, no moving it. Your cursor hovers over the buy button and your brain fires up. What if this slices straight through? What if this starts another drawdown? What if everyone in the Discord is long the other way? Heart rate jumps. You zoom out, redraw the same line, add an indicator, flick open Twitter. Scroll the news. 10 seconds later, the candle launches without you. You watch it run cleanly to your plan to take profit. Unrealized profit that could have been yours. Dopamine hits anyway, but twisted. Okay, I missed the clean entry, but if I smash market order now with double size, I can still catch the move. You chase, tighten the stop to improve the risk reward, get wicked out on noise, and then sit there staring at a red P&L box, wondering how you can read Mark Douglas, agree with Mark Douglas, and still trade like the opposite of everything he talks about. This video is about fixing that. Not with another magic setup, but by rewiring the way your brain relates to risk, randomness, and your own beliefs, using 15 powerful mindset shifts inspired by Mark Douglas and modern trading psychology. Most traders lose money. This is not financial advice. Past patterns don't guarantee future results. Risk management is survival, not decoration. But if you change the way you think, you change the way you behave under pressure. And that is where consistency lives. Let's pull your trading brain out of self-sabotage and into trading in the zone. Here's the first trap Mark Douglas tries to rip out of your head. You grew up in a world of rules and authority, school bells, deadlines, bosses. If you followed the rules, you were rewarded. If you broke them, you were punished. Your brain wired itself around external control. The market is the opposite. No teacher, no boss, no rules. Unlimited upside and unlimited downside. No one cares if you follow your plan. The market doesn't even know you exist. Trading is complete freedom plus unlimited risk. You must create your own rules and actually obey them when every cell in your body is screaming to do something else. That's mindset shift. Number 1. From external control to radical internal responsibility. As long as you secretly expect the market to behave, to reward your hard work, or to respect your level, you're still living in school, not in markets. The market is always right. Not because it's wise, but because it prints the prices that decide your P&L. Mindset shift number 2, from certainty to probability. Your survival brain wants certainty. It wants to know this setup will work. It wants to be right. Douglas flips that. Consistent traders think in probabilities, not predictions. Any single trade is just one event in a random distribution. You can have a perfect A+ setup and still lose. You can have a sloppy FOMO entry and still win. When you haven't accepted that randomness, every red candle against your position feels like a personal attack. Cortisol spikes, adrenaline surges, your mouse hand shakes. Your prefrontal cortex, the part that can think in odds and R multiples, goes offline and your amygdala takes the wheel. That's why you move your stop loss just this once. Add to losers because it can't go much further. Exit winners early because you can't stand the thought of giving it back. Behind each dumb decision is a very intelligent brain, wired for survival. In a jungle, not on a chart. Mindset shift, number 3, from avoid pain to accept controlled pain. Most of us learn to behave through the threat of pain, punishment, disapproval, failure. In trading, that wiring makes you treat every small loss like danger. Your brain equates stop loss hit with I'm in trouble. So you avoid taking trades, or you avoid taking losses. That's entry paralysis and stop loss removal syndrome in one sentence. Meanwhile, the market is a probabilistic machine that requires lots of small controlled losses to access the big moves. Your edge only shows up over a large sample, but your dopamine system wants the hit right now. Every green candle lights it up. Every red P&L box triggers threat. You are literally trading on the chemicals your own brain is releasing. Mindset shift. Number 4. From mirror trading to independent conviction. Scroll Discord, Twitter, Telegram during volatility, and your mirror neurons start copying the crowd. If everyone is short, you feel like shorting. If your favorite guru posts, "This is going to the moon," you feel dumb for not being all in. Your edge gets drowned in other people's conviction. Then there are the trading paradoxes Douglas and other psychologists point out. The perfect-looking setup often fails because it's crowded. The best trades feel uncomfortable because you're early, not late. The more indicators you add, the less clearly you see price. The tighter you make your stop, the more often you get stopped out. The more you stare at every tick, the less you remember the bigger picture. Your brain wants comfort, certainty, and social proof. Trading rewards discomfort, uncertainty, and going against the herd at key moments. So the real battle isn't you versus the market. It's you versus your own untrained responses to an environment of freedom, randomness, and risk. Let's make this expensive. Imagine your short NQ on a textbook setup. Lower high into resistance, RSI divergence, volume drying up, order flow flipping. You enter with 1R risk, stop above the swing high, target at the prior low. Trend is down, it all lines up. Price ticks in your favor. Pull 0, 5R, dopamine smiles. Then one aggressive buyer steps in, candle snaps back. You're still within plan, your stop hasn't been touched, but your brain screams, "It's reversing, close it. Don't let this winner turn into a loser." You bail at break even. Minutes later, the market does exactly what you expected, flushes into your target. You should have banked plus 2R. You booked 0R. Now serotonin takes a hit. You feel flat, annoyed, ashamed. You just proved to yourself, again, that you don't have the discipline you thought you had. So on the next setup, you overcorrect. This time you refuse to be shaken out. You size up. You move the stop loss just a few ticks because you know it's going to work. When the trade goes against you, cortisol blasts through your system. Heart racing, breathing shallow, vision narrow, fight or flight. You can't hit the flatten button because now taking the loss hurts more than the possibility of losing more. Your survival brain is trying to escape pain, not manage risk. Price keeps grinding. 1R, 2R, 3R. By the time you finally exit, you've blown your daily loss limit and turned one planned paper cut into a wound. You stare at your P&L, numb. Then revenge trading kicks in. I can make it back. You scalp garbage, you overtrade, you flip bias 3 times in 20 minutes. Your brain is now a dopamine cortisol washing machine. Excitement, fear, shame, anger, repeat. At the end of the session, you're down 5R, drained, and you swear you're going to be more disciplined tomorrow. But tomorrow, under pressure, you run the same script. That's not a lack of information, that's a lack of mindset shifts. Meet Marcus. Marcus is a risk manager. He trades ES and NQ from a 3-monitor setup, TradingView with higher timeframe structure, a DOM, and a journal and stats dashboard. His identity as a trader is built around one sentence at the top of his whiteboard. Risk defines the trade. On paper, Marcus is disciplined. He has a max daily drawdown, a per-trade RCAP, and a rule: no moving stop losses. He's read Trading in the Zone, highlighted The Disciplined Trader, and watched every Mark Douglas seminar. In reality, Marcus is stuck in the exact loops you just saw. Losing morning. He bumps size in the afternoon to get back to even. Big winning streak. He gets euphoric and starts letting it ride. Chop. He becomes gun-shy and skips his best setups. His P&L curve looks like a heart monitor. Big spikes up, deep spikes down, no real trend. One Tuesday, after a day where he broke every rule he'd written, Marcus closes his platforms and just sits there. He isn't confused about what he did wrong. He's confused about why he keeps doing it. Why does he cut winners and ride losers? Why does he move his stop loss even though he knows it destroys his stats? Why does he trade bigger after watching a green day turn red? He picks up Douglas again, reads that you can't control the market, the only thing you can control is yourself. And most of the beliefs that help you function in normal life sabotage you in trading. He scribbles in his notebook, maybe the problem isn't my system, maybe the problem is my mindset. Marcus decides he's going to treat his psychology like he treats his risk management, as a process. He builds a plan around 15 specific mindset shifts. Mindset shift number 5, from trade to avoid loss to trade your edge across a series. Marcus realizes his real goal each day has been don't lose. He rewrites his daily goal. Execute every valid setup according to plan across at least 20 trades this week, regardless of individual outcomes. That immediately reduces the pressure on any one trade. Mindset shift number 6, from money outcome to process outcome. He stops setting P&L goals and starts setting execution goals. No moving stops, no adding to losers, no taking profits before at least 1 hour unless there's a clear structural reason. After each session, he grades himself on one thing. Did I follow my rules? Mindset shift. 7, from I am my last trade to I am my sample size. To fight the identity rollercoaster, Marcus forces himself to think in 50 trade blocks. Any edge lives in the distribution, not the last candle. He sticks a note on his screen. This is trade 7 of 50, not your career. Mindset shift. Number 8, from avoid fear to train with fear. He runs replay sessions on TradingView with Tiny Size or a sim, specifically to feel adrenaline and practice breathing, self-talk, and holding trades according to plan. He's training his nervous system the way athletes train under pressure. Mindset shift. 9, from analysis addiction to clarity through constraint. Marcus deletes half his indicators. He keeps price action, levels, VWAP, up, and 1 oscillator. 2 timeframes for execution, 1 higher timeframe for context. Every setup is now defined by a simple checklist instead of a vibe. Mindset shift, number 10, from perfect setup or nothing to edge with uncertainty is enough. He accepts a Douglas paradox: you will never have certainty. Good trades often feel uncomfortable. Perfect-looking ones often fail. Instead of waiting to feel safe, he asks, is there a definable edge here? Is my risk defined? Can I accept the loss right now if it hits my stop? If yes, he takes it. If no, he passes. Mindset shift. 11, from stop loss is negotiable to stop loss is law. He reframes the stop loss as a ticket price. If he's long ES with a 3-point stop, he tells himself, I am paying 3 points to find out if this idea works. That payment is non-refundable. Moving the stop now feels like cheating the system. Mindset shift. Number 12, from revenge and overtrading to cooling off and reset. He builds rules into his platform. If he hits 2R on the day, he must take a 30-minute break away from screens. No exceptions. He keeps a notepad where he dumps the angry, embarrassed self-talk so it doesn't keep looping. Mindset shift. 13, from isolated trader to self-coach. After the close, Marcus screen records his trades and talks through what happened. Out loud. He looks at where he hesitated, where he cut winners, where emotion hijacked him. He becomes his own trading coach, not just a system runner. Mindset shift. 24, from market is against me to market is feedback. Instead of taking losses personally, he treats them as data. Was the idea bad, or was the execution bad? Did he follow his plan? He separates I lost from I'm a loser. Mindset shift number 15, from I'll fix it someday to 1 micro shift per week. Rather than trying to become a trading monk overnight, he picks 1 habit per week. This week, no moving stops. Next week, no revenge trades. Then, holding winners to at least 1. 5 are tiny, focused rewires. As he layers these on top of risk management and a solid setup, something starts to shift. His nervous system learns that a hit stop loss is a planned business expense. A missed trade is feedback, not a reason to chase. A drawdown is a signal to reduce size and review, not to double down. He's building new associations. Red P&L no longer automatically equals danger. It equals information. Dopamine comes less from random green numbers and more from seeing his discipline score improve. Fast forward, Marcus still has losing trades. He still has red days. He still gets that adrenaline spike when ES rips 20 points in a straight line. But something is different. When price tags his stop loss, he doesn't move it. He accepted that pain at entry. He closes, logs it, and looks for the next setup. When he feels the urge to make it back, he recognizes the revenge trading loop before his mouse hand acts. He says out loud, "This is my brain on tilt. Break." He gets up, walks away, resets. When he's in a winner, he no longer bails at break-even plus commission. He knows his stats. He knows that holding to 2R is where his edge shows up. Exiting early feels worse now than taking a full planned loss. His P&L curve starts to smooth. The wild spikes shrink. The deep drawdowns become shallow dips. His equity grows, not in a straight line, but with a clear bias. Most importantly, his relationship with trading changes. It stops being a daily emotional roller coaster and becomes a craft. A process. A game of executing mindset shifts under fire. He still reads Mark Douglas. He still listens to trading psychology content. He still tweaks his system. But now when he looks at his trading view screen at the start of the session, he doesn't think, "I hope I make money today." He thinks, "Today is another rep, another chance to practice thinking in probabilities, respecting risk and following my edge." That's the real promise behind mastering trading psychology with Mark Douglas. Not that you'll never feel fear, never take a bad trade, or never have a drawdown, but that over time, you become the kind of trader who can sit in front of the same volatile markets that blow up most accounts, and calmly execute a plan that keeps you in the game long enough for your edge to actually mean something.